Just five major banks in the United States hold assets equivalent to nearly 50% of the country's GDP. That's right, a small group of financial institutions wields an outsized impact on our economic landscape. But who are the puppet masters behind this financial theater? Is it the politicians, the tech giants, or perhaps the central bankers? Well, yes, all of them. But while all of these play crucial roles, there's one figure who stands out, the most powerful banker in America. His name is Jamie Dimon, and he's the chairman and CEO of JP Morgan Chase. When he speaks, markets listen. His decisions ripple through boardrooms, stock markets, and maybe even kitchen tables where families discuss their financial futures. But how did this one man come to hold so much power? And what does it mean for the rest of us? To understand Jamie Dimon's rise to power, we need to go back to where it all began. Jamie Dimon was born on March 13, 1956 in New York City. He grew up in a family where finance was in the blood. Both his father and grandfather were stockbrokers at Shearson, a brokerage firm. From an early age, Jamie was immersed in the world of finance. The thing is, young Jamie wasn't willing to simply follow in his family's footsteps. He had bigger ambitions. After graduating from Tufts University with a degree in psychology and economics, he took a job at Boston Consulting Group. But the corporate world wasn't enough for Dimon. He wanted more. So he headed to Harvard Business School, where he earned his MBA in 1982. In fact, he graduated as a Baker Scholar, an honor reserved for the top 5% of the class. It was here that Dimon's path to banking greatness began to take shape. During his time at Harvard, Dimon caught the attention of Sandy Weill, a legendary figure in the banking world. Weill saw something special in the young Dimon and convinced him to turn down job offers from Goldman Sachs and Morgan Stanley to join him at American Express. This sole decision would change the course of Dimon's life and the future of American banking. At American Express, Dimon quickly made a name for himself. He was smart, hardworking, and had an uncanny ability to spot financial opportunities that others missed, but it was his partnership with Weill that really set him apart. In 1985, Weill left American Express, and Dimon followed. Together, they took over a small consumer finance company called Commercial Credit. This might not sound like a big deal, but it was the start of something huge. Over the next decade, Dimon and Weill went on a buying spree. They acquired company after company, building what would eventually become Citigroup, one of the largest financial services companies in the world. By 1998, at just 42 years old, Dimon was the president of Citigroup. He seemed unstoppable. But then, something unexpected happened. What do you think it was? Well, I can assure you that you won't guess it. Dimon was fired from Citigroup. The details are murky, but it seems that Dimon and Weill had a falling out. Some say it was because Dimon was too ambitious, others that Weill felt threatened by his protege's rising star. Whatever the reason, Dimon found himself out of a job and at a crossroads. But as we'll see, this setback was just the beginning of Dimon's rise to true power. After leaving Citigroup, Dimon didn't wallow in self-pity. Instead, he saw an opportunity. In 2000, he took over as CEO of Bank One, then the fifth largest bank in the United States. It was there at Bank One that Dimon showed his true colors. He was a cost cutter, a risk manager, and a visionary. He streamlined operations, improved efficiency, and turned the bank around. In just 4 years, he made Bank One an attractive acquisition target. And who came knocking? None other than JP Morgan Chase. In 2004, JP Morgan Chase acquired Bank One for $58 billion, and Dimon came along as part of the deal. He was named president and chief operating officer of the combined company under CEO William Harrison. But Dimon wasn't content to play second fiddle, so he kept playing his cards. He eventually won the promise that he would succeed Harrison as CEO within 2 years. True to the agreement, Dimon became CEO of JP Morgan Chase on December 31, 2005. He was 49 years old and stood at the helm of one of the largest and most influential banks in the world. But the real test of his leadership was yet to come. In 2008, the global financial system was on the brink of collapse. Banks were failing, the stock market was in free fall, and panic was spreading. This was the moment that would define Jamie Dimon's career and cement his position as the most powerful banker in America. Dimon's conservative approach to risk management in the years leading up to the crisis had left J.P. Morgan Chase in a stronger position than many of its competitors. While other banks had gorged themselves on subprime mortgages and complex derivatives, Dimon had largely steered clear of these risky investments. So, just when the chaos began to sweep through all the banks due to the mishandling of subprime mortgages, J.P. Morgan Chase, under Dimon's leadership, remained relatively stable. In fact, the government turned to Dimon and J.P. Morgan to help save the financial system. At the behest of the Federal Reserve, J.P. Morgan acquired Bear Stearns, a failing investment bank, for a fraction of its previous value, just $10 per share. Later that year, they also acquired the banking operations of Washington Mutual, which had become the largest bank failure in U.S. history at the time. These moves were risky, but they paid off. J.P. Morgan emerged from the financial crisis stronger than ever, while many of its competitors were left weakened or destroyed. Dimon's actions during the crisis earned him praise from many quarters. He was seen as a steady hand in a time of chaos, a banker who understood risk management and had the foresight to avoid the worst excesses of the subprime mortgage bubble. And funny enough, this won't be the only time he plays the role of industry stabilizer. In the years following the financial crisis, J.P. Morgan would face billions of dollars in fines and settlements related to its mortgage practices and other issues. But through it all, Dimon's position remained secure. Although that doesn't mean he hasn't had to face some challenges. In 2012, the bank suffered a $6 billion trading loss, known as the London whale scandal. In February 2012, a series of aggressive transactions involving credit default swaps were entered, reportedly as part of the bank's hedging strategy. Bruno Ixil, a J.P. Morgan trader nicknamed the London Whale, accumulated outsized CDS positions in the market. Traders picked up on this unusual activity and placed heavy opposing bets on the CDS positions. An estimated trading loss of $2 billion was announced. However, the loss amounted to more than $6 billion for J.P. Morgan Chase. Dimon initially dismissed the issue as a tempest in a teapot, a statement he would later regret. The incident was a black eye for the bank and led to increased regulatory scrutiny. Yet, Dimon's handling of the aftermath, taking responsibility, cooperating with regulators, and implementing stronger risk controls, ultimately reinforced his reputation as a capable leader. As the dust settled, J.P. Morgan Chase continued to grow and prosper. By 2019, it had become the largest bank in the United States by assets, with a market capitalization that dwarfed its competitors. The bank's success was reflected in Dimon's compensation. In 2021, he received a pay package worth $84.4 million, making him one of the highest-paid bank CEOs in the world. As of 2024, J.P. Morgan Chase has over $4.1 trillion in assets. That's more than the GDP of all but a handful of countries. The bank employs over 250,000 people and operates in more than 100 countries. In terms of market capitalization, J.P. Morgan Chase is valued at over $600 billion, making it one of the most valuable companies in the world, not just among banks. And Dimon himself? His net worth is estimated at around $2 billion, largely due to his stake in J.P. Morgan Chase, but his influence extends far beyond his personal wealth. Dimon's power was on full display in 2023, when several regional banks in the United States began to fail. Silicon Valley Bank and Signature Bank failed, and as panic spread and regulators scrambled to contain the damage, all eyes turned to Jamie Dimon. In a move reminiscent of the 2008 crisis, J.P. Morgan Chase, under Dimon's leadership, stepped in to acquire First Republic Bank, one of the troubled regional lenders. This move helped stabilize the banking system and prevent a wider crisis. And if you need more reminders of 2008, this was the second biggest bank failure in the country's history. Once again, the government asked Dimon to step in, and he did. JP Morgan Chase took over most of First Republic's assets and covered both insured and uninsured deposits from the Federal Deposit Insurance Corporation, the agency that protects bank deposits. JP Morgan booked a one-time gain of $2.6 billion from the deal, but it also further consolidated its power. The bank, already the largest in the country, grew even bigger, and Dimon once again was hailed as a savior of the financial system. That's a key aspect of Dimon's power. In times of crisis, both the government and the market look to him for solutions. He's become, in essence, America's banker of last resort. So, how did Jamie Dimon become the most powerful banker in America? It wasn't just his actions during the financial crisis, although that certainly helped. It was a combination of factors that set him apart. First, there's his longevity. In an industry where CEOs often come and go, Dimon has been at the helm of JP Morgan Chase for over 15 years. He's outlasted his peers at other major banks, giving him an unparalleled level of experience and influence. Then there's his personality. Dimon is known for his blunt, outspoken style. He's not afraid to speak his mind, even when it means criticizing government policies or defending the banking industry. This has made him a go-to figure for the media and policymakers alike when they want a banker's perspective. But perhaps most importantly, there's JP Morgan Chase itself. Under Dimon's 18 years of leadership, the bank has become the largest in the United States by assets. It's a leader in investment banking, commercial banking, and credit cards. When JP Morgan Chase makes a move, the entire financial world takes notice. It has become so large and so integral to the financial system that its failure would be catastrophic. It is too big to fail, and that's what gives the bank, and by extension Dimon himself, enormous influence over economic policy and regulation. So, what comes after him? At 68, he's already outlasted many of his contemporaries. He's survived throat cancer and emergency heart surgery. Yet he shows no signs of slowing down or stepping aside. And as long as Dimon remains at the helm of JP Morgan Chase, he will continue to be a force to be reckoned with. The last king of Wall Street.